right, let's take a look here. How's everybody doing today?
Welcome to the show, it's Mortgage Talk. Grab a coffee, sit, and let's unlock the dreams you've got, the place you crave. From the front porch swing to the hidden cave. Talk about your home, talk about your plan, talk about the future where you'll stand. Your mortgage, your dream, your story to give. Let's talk about the place where you want to live. Got questions? Here's the place to be. A TikTok Live Mortgage Jubilee. Fix or float, we'll break it down. From city lights to your small town.
Well, as I always do, I'm starting off by looking at the pricing on an FHA purchase here in Texas. And I do this not only to kind of just give some updates to you guys, but also to just check on pricing overall. Looks like we're doing pretty good on pricing, has been improving. So FHA purchase, 680 credit score here in the state of Texas. It'll be similar across the country. Looks like we're at 5.125 with a little bit more than a half of a point. Now, a point, if you're unfamiliar, is 1% of the loan amount. And this is a $400,000 deal. So half of $4,000 would be about $2,000 for that 5 1/8 interest rate. I can zoom in on this here a little bit. I know it's really small for you guys, but as you can see, all of these lenders that we have with, signed up, they all just kind of, we price in one deal and the cheapest price floats to the top. That's one of the benefits to working with a mortgage broker like myself. Hi, my name is Kenny Murden. I am newer to TikTok. I'm not newer to lending. I've been lending since 1999. And in that time, I have been helping real estate agents and loan officers structure some of the more complicated deals that they have. That makes me capable to help you structure any deals that you might be working on, whether you're looking to purchase, whether you're looking to refinance, or if you just have questions about mortgages or real estate in general. I'm here to answer any of those questions. So welcome to Mortgage Talk, and I appreciate you guys stopping by. This is an opportunity for you to learn a little bit more about the mortgage business. I'll kind of be sharing some updates here. We have some new things going on in the world of mortgage, which normally, 9 times out of 10 when I come on here, I'm talking about the same old thing. I'm talking about purchasing. I'm talking about refinance, talking a little bit about interest rates. But there are new lenders coming into the space that we are really excited that are joining the space. And there are new programs coming in from, I would say, at least government-sponsored entities. I'm not sure exactly how it all works. It's a very new program that we're not even fully signed up with yet. I just submitted it for approval the other day, and we should have it on the shelf here by early next week. And what that is going to allow us to do is offer incredible interest rates. So when I was just looking at here at the 5 1/8, and just so you know, if you're just scrolling through, I'll be able to price anything you have. If you want to just know what interest rates are at, I'll do that for you here live without having to wait for, application or anything like that. But we're seeing where with this equity shared program, you're able to get 1.5% lower in interest rate. So in this case, if interest rates are 5.125 for that FHA deal, then we would subtract an additional 1.5 from there. Now that's a little bit misleading because it needs to be conventional, right? So this is not going to work for FHA. So it'd have to be conventional which that interest rate is going to be a little closer to 6% for comparable costs, where you're less than half of a point, right? And we talked about a point being 1% of the loan amount. But so if we're at about a 6% interest rate, that brings us down to a 4.5% interest rate. And so that's a game changer in anybody's book. If they're looking at buying or refinancing now, it's not free, right? So what are the costs associated with getting that super low interest rate? It's an equity shared program where you are actually allowing the lender to pay a lot of money up front that they would need to get paid back if you decide to refinance or sell. But in the meantime, that is your savings to have. And so that's one way that, whether it's government or whatever, it is government backed, but it's basically trying to solve the affordability crisis by giving lower interest rates. Now, not everybody is going to be in favor of wanting to accept that benefit than to have to pay it back later with potential interest of the appreciation of the house. So that's something that we could have a longer form conversation on, or we could have it here if you have questions and want to plug them in. Happy to do that here. Happy to price out anything that you might have that you want to take a look at. Now, in addition to people looking to purchase or refinance, I did make the move recently back to Nexa. Now, who is Nexa as far as an employer? They are the largest brokerage in the country. And so another demographic, if you will, that I'm looking for in addition to buyers and people looking to refinance are other lenders, are other real estate agents, because there are ways that I'm able to work with them in a way that's going to help them get more money for the job that they do. And it also benefits me. And there's ways that I will help them, beyond just, a few things where I'll allow them to use this channel, which I usually get, a few people looking to buy or refinance every hour that I'm on here, just so you know. That's kind of, what's happening here is the algorithm is finding the people that are interested in mortgage, right? If they're not interested in mortgage, beautiful thing about TikTok is they get to keep on scrolling, no big deal. I do it too, especially late at night. As I'm scrolling through, every once in a while I'll see one of my friends on here and I'll see, what are they talking about? And I'll jump on as a guest and talk with them a little bit. So we're having fun, but ultimately we're just looking to help people, full stop, right? So whether that's somebody looking to purchase, looking to refinance, has questions about real estate, or if you yourself or somebody is a loan officer or a real estate agent. So I'll talk a little bit about some of those benefits there. So for real estate agents, one way that, and it isn't that you don't have to be a real estate agent. It's just that if you are a real estate agent, there's an obvious way that you can add something to your bag of tricks. And that is a program called BDM, Business Development Marketer. That's something where here at Nexa, we're able to hire you as a BDM, a W-2 wage employee, and we're able to pay you on the mortgage side of the business with those activities. So if you are somebody who just kind of comes in contact with people that are going to eventually look for a mortgage, that is something that you'd be able to do whether you're a real estate agent or not. I'm just saying that's one of the possibilities. You could be a Walmart greeter. You could be anybody. If you happen to come across people that are looking to purchase or refinance, this pertains to you. Or if you know somebody, whether they're a CPA or, just any kind of profession that comes into, people looking to either need to buy or refinance, a divorce attorney, for example, would be, somebody that would come in contact with people that they, in turn, help them find a lender to help them refinance. And so that's something where they can now be hired as a business development marketer to be able to get paid on the mortgage side as they're generating that business. So that is just kind of a new thing with the change here. I'm obviously, wearing the shirt, kind of showing, the recent change. If you notice, the profile changed recently as well. And I actually changed the name of the channel. If you're not following me, Mortgage Talk just felt more fitting than my prior company, as I used to be a broker owner, and my recent company was called My Loan Partners. And that was the name of this channel, but I updated it to Mortgage Talk just because it was just very fitting. That's the sign that I've been, sitting in front of for the last few months. Like I say, I'm newer to TikTok. I got started on TikTok probably back in October-ish of last year. But yeah, happy to answer any questions, do any pricing as you're flipping through. I'll show again. I'm able to price out right here live on TikTok, be able to price your scenario, whether it is a purchase or a refinance. You could screenshot the phone number at the top, text me later, and get a full application, right? You could do that. Or if you're like, hey, Kenny, you know what? I'm just kind of curious. What are rates looking like? And then I can ask you the questions about credit score. What kind of house do you own? It as an investor, or is it the place that you live in? And we can kind of like figure out those details and get you some pricing. So that's a little bit about, what I'm able to do here and what I do regularly. I usually jump on for an hour a day. I was coming on at 10 a.m. Regularly on Central Time Zone. Minnesota phone number, moved to Texas. So I'm in the great state of Texas, but I'm from Minnesota. A little background there. But, our team, we're able to help anybody, across the country. So if you have any questions, we're able to help you on our team. So encourage any questions about mortgage or refinance, or if you know somebody that is looking to buy or refinance, if you share this with them, then they would be able to ask any questions that they have, or again, plug in the phone number, and we're able to help them that way as well. So with that was kind of the news, the couple of news items, again, where there's a new loan program coming out that's going to dramatically lower the interest rate. But there is the trade-off of it is an equity sharing kind of a program. So the lender goes ahead and pays a dramatic amount of money to lower your rate permanently. It's not a temporary buy down, but they are buying the rate way down, 1.5 points under the market rate. Right now, that's somewhere in the ballpark of 6%, paying less than 1 point. Again, 1 point is 1% of the loan amount. And then, so at 6%, if that's reduced a point or 1.5%, that is looking at 4.5%, which we haven't seen 4.5% since probably 2021, right? And so that's in the last 5 years. And then even before that, because rates did get down to 2% for a while there, but majority of the time, in all of history, it's been higher than 4.5%. And so this gets us back down to those really juicy, ridiculous, affordable payments. Now, because it is such a dramatic amount of an investment from the lender that you're then sharing that equity with the house with that lender, I would caution to say, make sure for affordability that it also makes sense long term to stay in the house, because you want time to pass for there to be appreciation, or maybe you're going to fix up something about the house that makes it more valuable. Right? So it's sometimes you just buy the ugly house and make it more beautiful, and that increases value. Some people are a little bit more creative or capable and add square footage, right? Anytime you're adding square footage, that's an obvious way that you're going to be adding value. Some of the ways that we did it, because I've purchased so many houses over my career, A lot of things that we would do, we would specialize at finding homes that were like maybe a 2-bedroom home that had maybe a den or something in it where it wasn't quite a legal bedroom, but then we would just modify it to make it a legal bedroom. And that's an easy way to take a 2-bedroom to a 3-bedroom. And that allowed us to then rent it as a 3-bedroom and get more rent, having more bedrooms. That's just a great little hack. You can do that all day, every day, twice on Tuesday. I have some creative ways to buy investment property with less money down. Again, happy to have a conversation about that as well. But any questions that you might have regarding mortgage or real estate, feel free to throw it in the chat. Or if this is something that you'd want to talk about later, simply screenshot this. Phone number's at the top. Text me later, and I'm happy to answer any questions that you might have about structuring a deal or just pricing something out. You know, if you want to, again, as people are flipping through, I'm able to price out your scenario right here live on TikTok right now without having to apply, wait, none of that. We can do that literally right here in the next few seconds if you have something that you want to price out. So that's another way that I'm helping people just kind of figure out what's going on there. So Mike says, are they just adding the points to the loan? How would the lender be an equity partner? So it's such a brand new program. I don't have all of the answers for you. But as I understand it, they're paying 7.25%, I think, points. So, or percentage, right, of the loan amount. And so that amount, if you sell or refinance in the next 3 years, is the amount that you'd have to pay back. Beyond the 3 years, if there's appreciation in the property, then you also pay a percentage of the appreciation up to a limit, right? They have a calculator that, you know, I'd be able to share with you and see if it makes sense for you or for, you know, somebody you're working with if you're a lender or a real estate agent. But I'm learning more about it. I'm just saying this is, you know, kind of a breaking news kind of a thing. It's coming. You'll hear it everywhere pretty soon. You know, the big companies like Rocket, like Guaranteed Rate, like some of these big lenders are coming out with the same program. A buddy of mine works with that lender that is bringing it to the market, you know, from, you know, government backed, whatever. And so I'm getting that here at Nexa. We're the largest mortgage broker in the country. So all the big, you know, companies are going to have it. And once they have it, it's going to be a really easy thing because customers understand rate better than anything. Now there is amortization cost, and there's another loan program if you want to pay off your loan quicker. Doesn't work well here in Texas, but everywhere else it works really well. Where it fights the amortization cost. But everybody understands rate really well, and this is going to advertise really well. And honestly, it is going to solve the affordability crisis for a lot of people. It's going to make payments lower than rent again, where right now that isn't really necessarily the case. There are pockets where you can own for less than you can rent if you're putting very little money down to make it comparable to renting. Because, you know, when you rent, you might just have a security deposit, first and last month's rent or whatever. You're not putting that much money down to rent, but you also don't own the place you're renting. So by bringing the interest rate dramatically lower, this is going to give you a monthly payment that's going to be a lot more affordable for the house that you're buying. I also think, you know, one thing that I've just kind of been famous for saying is I've been, you know, talking with people, just passive talking, that comparing rent to owning, I don't think we're going to see the appreciation we've seen in the last 10 years in housing. I don't think we're going to see it in the next 10 years from now. And so one of the reasons that is they are, you know, again, a political change is that they're blocking big money from buying up single family homes. That is fantastic for new buyers out there, younger buyers. The average first-time home buyer is now 40 years old. That's ridiculous. Homes are too expensive for the younger generation to come in and buy. Are there younger buyers? Absolutely there are. But the median age of a first-time home buyer is 40 years old. And so what this will do by slowing the appreciation and having options where we're getting much lower interest, which is going to reduce the payments, is going to make, and that'll reduce the qualification. Like, you get qualified at that 4.5% interest rate, because this is not a temporary, a temporary interest rate. This is permanent. This is fixed for the 30 years. So that's going to be really neat to see a more affordable option for the younger generation to be able to come into home ownership. But I caution that if you're buying, there's a hidden cost to sell. So if you buy something for $100,000, and I'm just using round, simple numbers to understand, $100,000, that house will need to appreciate 6%. So $106,000 before you're able to sell that house and break even, right? So if you buy it right now and then you need to sell it, it needs to appreciate first. What needs to happen first? You'll need to own the place for a while before it's not going to have a hidden cost to be able to sell it. Now, if you own it and selling doesn't make sense, you don't have to sell it and lose money on the sale. You can rent it out, right? So it's not like you're stuck in that situation, because now you do own something, and that's got advantages to it. But there are some hidden costs to owning, where I caution, if it's not a long-term decision, maybe rent is something that we take a look at. I know a lot of real estate agents and loan officers always push owning is better than renting, but I'm not that guy. So if you're not looking at least, I'd say, a 5-year plan, consider renting for that fact, unless you have a clear idea for how you're going to improve the property to make it more valuable. So I just don't want to see anybody get stuck with that hidden cost of having to sell a property, because it is pretty expensive. I mean, even if you have real estate agents that are willing to reduce their fees and things like that, it's just an expensive thing to sell a house. So wanted to make you aware of that. But yeah, good things are coming. It's a huge news thing. And for people that I see are kind of filtering in here, I'm able to price loan scenarios for you. I priced out this scenario here, FHA 30-year fixed here in Texas, paying less than a point, and interest rate there is at 5.125. And so I do that more so to just kind of see what rates are doing, because I'm not quoting stuff on a daily basis, but when I jump on here, I like to see, were rates getting better, were they getting worse? Another thing that I do to follow that here, and I'll share my screen, is I follow the 10-year yield and see what rates are doing. This red number here, the 0.38, that is a reduction of the yield. That means people are buying bonds. It's probably us, it's probably the Federal Reserve, buying bonds and lowering this yield down to 4.01. Now that just correlates with interest rates. It's not a one-to-one factor, but banks typically will price when this reduces, they tend to lower their interest rates. So it's just kind of an indicator. It's not so much a direct correlation. But it's good to see that red number there. It means interest rates are getting more affordable. And like I said, there's that new program coming out that will make it a lot more affordable, but there is the equity sharing aspect to it. That, if it's something where you're looking to own, I was just talking to a gentleman today looking to come here, buy a place here in Texas, moving from Michigan. And, he has perfect credit, just wants to get the best rate. So obviously we talk about that program. and he's looking at being here for a long time. I asked him, what's your plan? Like, once you buy this house, how long do you think you're going to live in it? And he says forever. And I'm like, well, is forever, 10 years? Yeah, it's probably going to be more like 20. I'm like, okay, well, in that case, you'd be a strong candidate for the benefits of that loan program that are going to reduce the payment. He's buying, a $900,000 house, and so that's going to be monstrous savings to save 1.5 points below the market rate every single month, right? It's not a temporary buy down; it's a permanent rate buy down. So that's something where, it's just going to save people a lot of money, and that's really what's needed in the space right now. So I'm excited to have that. It'll be, like I say, early next week. We should have that available, and so I'm already, I have a lot of interest. People are looking at that program very closely. But again, for those that are filtering through, my name is Kenny Murden. I'm newer to TikTok. I'm not newer to lending. I've been lending since 1999, and in that time, I've been a fantastic resource for real estate agents and loan officers, helping them price their more complicated deals. And that makes me well qualified to answer any questions that you might have as it pertains to real estate or mortgage. Whether you're looking to purchase or refinance, or if you know somebody that's looking to purchase or refinance, if you'd share this with them, I'd be able to help them as well if they have any questions. And I forget what it was, but if you like the content, the way that I'm delivering it, trying to break it down, be helpful and educational. If you like the stream as well, I know that helps the channel. So that's just by tapping the screen, if you don't mind. But that's kind of it for today. If there's any other question, I'll say last call for questions, because I have some other, let's see, got a call from a broker today. He said 4.9 is possible on a 15-year. Does that make sense? Let's take a look. So I'm going to modify this. I'm going to assume a conventional loan. So I'll switch this from FHA is going to have a lower interest rate. So let's go conventional. And I'm going to assume it's a refinance, and I'll just say we're at an 80% loan to value, and you can change these if you want. I'll assume good credit. And I'll assume it's a single family house here in Texas. So those are all my assumptions. You can feel free to correct me and I'll update it for your information, but it'll be close. So let's take a look, see what it does. Hey, I appreciate the likes. 4.9 is not looking possible if it is conventional conforming. So I'm going to modify it and switch it to FHA. I'm sure that'll be the difference. And, FHA gets kind of a bad rap. That's where we're looking at here. Yeah, 4.875, 499. That's definitely doable. Or if it's a VA loan also, that that would make sense as well. So I'm guessing it's a government loan is what they're basing their quote on. Now, depending on how much, thanks, Gene. Depending on how much equity you have in the property, if you have an FHA loan, you're still going to be paying mortgage insurance. But the difference in rate, we can take a look at it. If that 4.8 or 4.9 makes a difference between the payment, or if it's the 5.5% without mortgage insurance or the 4.8 with mortgage insurance, which way is going to be a lower payment. chances are it's going to be a lower payment if it's FHA. That's just kind of what I've been seeing recently. But with FHA, you have the upfront mortgage insurance as well. The 1.75% of the loan amount is tacked on to your loan amount. So it's financed so you don't feel it. But if you had to go turn around and sell the house tomorrow, you did spend that money, right? So even though you didn't feel it, it's equity that, again, like in that other program that we're discussing, where it's a conventional conforming deal and we're sharing some equity with the lender for them to buy our interest rate down 1.5 points, down to 4.5% on a 30-year fixed, less than a point in cost. Again, a point is 1% of the loan amount. I'm just trying to do some disclosure, just necessary disclosure stuff there. But yeah, Gene, this is a new program. I saw you recently moved over to Loan Factory. I'm really good friends with Tuan, and this is something that I'm helping them get this program as well. So you'll have access to this program as well. It's a fantastic loan. Oh no, you didn't. You're not still at that bird company, are you? I just happened to have seen your Facebook profile recently. That's where I was getting Loan Factory from. Oh, just life insurance now. Okay. Well, definitely, stay in touch, and I'll definitely let you know if you have any questions about some stuff that's going on here. Cause right now, you have that license and, for mortgage. And I think that's a very valuable thing to have. And we could have a conversation more in depth about that. But, right off the bat, what benefits a loan originator right now, the reason why I'm sitting in the chair that I'm at, is because of the BDM program. So basically what the BDM program does, okay, and I'd love to help you do it, but that program allows real estate agents to have an incentive to work with us. That's creating a lot of leads. That's helping me write more business. That's also helping me have too much business to write, which makes it easier for me to get more loan originators to come and write that business. And if you understand the Nexa model, that's a very powerful thing, to basically have lead providers and lead, producers, people that are going to do the work, all happening on your team. You get essentially mailbox money for it. So it's a wonderful, wonderful thing. And then in addition to that, I teach my team of loan officers how to come on TikTok and do this. And I actually invite them on this very channel because I've been doing this for a while now. This channel is kind of dialed in to find people that are looking to buy or looking to refinance. And it's, so if they want to use this very channel to have access to this exact audience, that's something that I am offering to the people on my team as well. So you'll see some new names and faces on this channel if you follow Mortgage Talk, which I encourage you to do, and share this with anybody that might be looking to buy or refinance the next few months, because this is just going to be an informative place for them to be able to ask questions, making sure they're getting the best deal, making sure that they know about all these new programs that are out there. And, so this is definitely the place to be if you have questions about real estate in general, about mortgages, about, pricing out whatever loan scenarios, again, for the people that are filtering through. I price out loans live right here on TikTok. You don't have to wait for an application. You don't have to, wonder, what rates are doing. I do that right here live for you. So if you have a loan scenario, like I just priced out this 15-year, where a gentleman was asking, is it even possible to get the 4.9 on a 15-year? The answer is ultimately yes. But it's going to be a government loan, whether it's VA, USDA, or FHA. Conventional is a little bit higher right now. It looks like it's about 5.5%. with less than a point of closing costs. So a little bit about what's going on here. And then for the real estate agents, if those real estate agents find themselves in a position where they're generating a lot of mortgage business and they're not yet making income on the mortgage side of the business, they can be non-licensed and participate in income from the mortgage side of the business. So I invite real estate agents to reach out for more information on that. And again, for the loan officers, I do that, and I'm like every day it seems like right now I'm adding real estate agents that want to get in front of that income stream that they've just been kind of walking past because they thought they need to get licensed or what have you, or they just didn't know about, the possibility. So it seems like every single day I'm adding real estate agents that are, again, in turn, providing more mortgage business to our team. And so that, then requires me to find more loan officers that are going to help me get all of that business done. Now, I personally only do, I'd say 5 to 10 loans per month, and the rest I kind of rely on my team. So if you're one of the, lucky few that are working with me right now, who you are. But I only personally work on, a small number of loans because I like to be able to give to my team. I like to have time to come on here and be educational for, prospective buyers and refinance folks. And I also like to have time, like, for example, this evening I'll be going to a band concert where my 14-year-old daughter is going to be playing the trumpet in a high school band. So those are some of the things that I focus on, where I'm trying to be as productive as possible, provide as much value as possible, and then also not get bogged down in some of the busy work. So, and then also I'm looking to add different state licenses. Let's see, Gene says, I'll message you how I can help your loan officers with buyer's qualifications too. Great, perfect. I'm looking at, let's see, with FHA, does the PMI ever drop off? Only if you started with 5% or more in equity. Then it drops off after 11 years or so. But if you buy an FHA house, or you even refinance, whatever, if you have less than the 3.5% equity at the beginning of the loan, it never falls off. The only way to get rid of the mortgage insurance at that point is to refinance or pay it off entirely, or sell your house or whatever. So it used to always fall off, but they did a rule change, and they also made it cheaper. So it's not all good, it's not all bad, but an excellent question, and hopefully that made sense. So if you have the minimum down payment, it stays on forever. If you put a little bit more down payment, or you refinanced and you had a little bit more equity, then yes, it will fall off after 11 or so years. So, and Gene, I'm anxious to hear about what you have to share. And if you want, I invite you to come on as a guest or whatever, if you wanted to have a conversation about it. 1 second, I gotta tell my son, yes, you can go to the gym. Good to see he is working out. He went yesterday as well. But yeah, so I mean, if you wanted to jump on here and have a conversation in front of the audience, you're invited. You're more than welcome. Just request it, I'll accept it, and you'll be on. Otherwise, screenshot or save the number at the top of the screen and reach out, call or text after I'm done with the live, and we'll talk in greater detail. Like to catch up just any, generally anyway, because perfect. Yeah, it's just it's been a while, and I'd love to hear more about what you got going on there. And I just generally like to help people. So Kay Thomas says, if I refinance, do I start my terms back to 30 years? Only if you choose to. So we can set your term to anything. So if you've been paying 3 years on a 30-year fix, we can give you a 27-year loan. We can make it any increment of months, anywhere, and then there's a big cost savings if you go down to 15-year. There's an interest rate reduction. So everything prices off of the 30-year bond from 16 years and on. But if you get a 15-year or shorter, then it's priced on a different different bond on the secondary market. So it's not basically it's not double the cost to go to a 15-year. So if you're looking at, let's see, where are you seeing FHA rates right now? I just priced it out. We can price yours right now, but I priced out a 680 credit score here in Texas with a 3.5% down. And the interest rate we priced out was 5.125 with less than 1 point. So if that pertains to you, then there you go. But if it doesn't and you have a different scenario, I'm happy to plug it in right now and give you a better, more accurate pricing to what you have. Or if you want just an actual drilled down quote, then the phone numbers at the top, either take a screenshot of this and hit me up later. See, I'm in Texas, under contract on a new construction. Perfect. So the same thing applies. I was doing a Texas deal. A lot of times with new construction, they tend to start with a higher interest rate. In what I mean by starting it, but then the lender has incentives that brings it down. Your rate is currently floating. Your rate in December is 5.875. That's way too expensive. They better be paying you a ton of incentives for that interest rate to be that high, unless it's not FHA, unless it's conventional, then that's a fine interest rate. But if it's an FHA rate, it's not market. It's over market value by a lot. So that's something that I'd be able to help price that out for you. And the value is when you get a competing quote like mine, you can take it to them and say, hey, I just got this from across the street. I'm either going to go and do business with them or you're going to match this. Take my quote and just hold their feet to the fire. Either way, you're going to save money. And then if they say no, they can't, I'll write the loan for you, no problem. Beautiful thing about FHA, and this is true for most loans for me, is I'm able to transfer the appraisal and you don't have any loss of time, so you're able to close on time. We've been waiting for 30 days to lock the rate. I agree with that. I like to be within 30 days before I lock the interest rate, especially right now when I'll change the screen here to what interest rates have been doing. That's right, you can't see my mouse, but if I use like here I'm using my mouse over this duration of time when it's been going the right direction, it's been going down, that floating has been valuable to you. Now, if it was going the other way, it's like, son of a bitch, I wish we were locked, because it's getting more and more expensive. So what we can do as a broker is I can lock in an interest rate for you to safeguard from that higher action. And then if they get lower than they're at right now, I can use your same paperwork and put it with a different lender and use that lower price, right? So I'm locked in with lender A, right? And that safeguards you from any wrong way action. So we'd be able to lock in that 5.125 today. But if rates get better, let's say it gets down to 4.875 or what have you, I'd be able to switch you over to lender B, because I'm a broker. I'm working with almost 300 different lenders. So I can just take you to the next, lender. We'd have to redisclose, but I can use all your same paperwork, and then we'd be able to take advantage of that lower interest rate. So That's kind of the best way that I know how to have your cake and eat it too. But either way, whatever, let's see. So you're saying 5.125 with no points. It was with half of a point. So, and again, a point is 1% of the loan amount. I don't know what your loan amount was, but the example that I gave was a $400,000 purchase. So for the 5.125, a half of a point is $2,000 in lender costs. So that's half of a percent of the loan amount. So happy to run a quote for you. Bring it on the desk of your current loan officer. Yeah, it's a much cheaper than the 5.875 is actually expensive, is what's going on there. I'm only a little bit cheaper than market rate. The 5.875 is higher than the market rate. And oftentimes they're able to do that because they're providing a one-stop shop. You come in, you see a model home, they walk you through, and they're just saying, here you go, we're just going to make everything easy for you. But unless you shop that very important interest rate with somebody else that's going to hold their feet to the fire, you might end up paying too much money. So I would recommend applying, and then they'll probably just match what I'm doing. So no big deal. You'll just close with them. You'll just get a better deal. But if they're not able to match it, I'll close you. No problem. Right now, like I said, I only do 5 to 10 deals per month. And right now I'm working with about 6 right now. So I'd be happy. I have the capacity to add your deal. No problem. I appreciate the comments. So see, well, they are paying all closing costs if I go with their lender. Yeah. So, I mean, if I raise the interest rate from 5.125 to what, 5.25 or 5.375 to make all the closing costs go away. Okay. But to go all the way up to 5.875, I would be giving you money to do better than pay for your costs. I mean, I don't know where all that money is going. I mean, they must just be charging a lot more money to fill their pockets beyond, 3, 4, 5, 6 points. I don't know how many points they're getting on the back end. Actually, they probably don't know either because they're probably working for some retail lender. So, but that's too expensive. Bottom line, even if you have zero cost, if it covers all of the appraisal, all of the title costs, everything, your rate at the 5.875 is too high. So we can drill down what that'll look like as far as lower cost. And actually, I prefer lower cost to lower rate, but the reason why I show it with a half a point is because most consumers understand lower rate more than the lower cost. So I always have that conversation when I'm going through an application where my personal preference is lower cost. You can only have one, low cost or low rate, which is more important to you. If you can only have one, because you can only have one, I prefer the lower cost. But then I just let them decide. If they prefer to have the lower rate, great, no problem. For those of you that are filtering through, let's see, I'm able to price out deals. If you have something that you're looking for, rates, feel free to ask. I'm able to price that out for you right now live on TikTok. If you want to take a look at it later, just snapshot this. My phone number's up top. Just reach out, call or text. I'm happy to get things priced out for you. Or if you just have general questions about mortgage or real estate, feel free to reach out, and I'm happy to answer any of those things. I've not been on TikTok very long, but I have been lending since 1999, so I've seen a thing or two. I've helped a lot of loan officers and real estate agents structure deals that may be a little bit more complex that they're trying to figure out. Where I cut my teeth on that the most was when I was a sales manager, and I had a whole call center of 100 plus loan originators that were bringing me the hardest deals that they couldn't figure out, and I would just kind of triage them. What ones do we need to deny? Which ones do we need to approve? what can be done. And so that's where I really cut my teeth on problem solving in the loan business. But definitely able to answer any questions that you have, real estate or mortgage related. And as we were also talking about at the top of the show, was there's a new loan program that's going to be coming out. I just had our company apply for it yesterday, and it should be here by early next week, where I'll be able to take the market rate of, we'll call it 6-ish% for a conforming 30-year fixed. And we'll be able to lower that by 1.5% to be able to pay 4.5% interest for the life of your loan. Now that does come with equity sharing. So the lender is putting out 7.25 or 7.5 points that they're paying up front. And oftentimes this is tens of thousands of dollars that they're paying to lower your interest rate. So if you sell the house within 3 years, you have to pay that money back, right? So that's one thing to note. Second thing to note is if the house appreciates, beyond that, you share some of that appreciation with the lender up to a certain amount. They're going to make sure it still makes sense for both of you, right? Nobody will do it if it's a win-lose, right? But as long as it stays a win-win, it's a fantastic loan program. And then if the house loses value, like some people think home values are going to go down, in some areas they might. So if that's the case, then you don't have to pay them back. So they're betting that home values will continue to go up. I tend to agree. I think most counties in the country, the home values will go up, and that's another caveat I forgot to mention. It's available throughout the whole country, but it's on a per county basis. For example, the county that I live in won't have that right now. They're adding new counties all the time, and most counties will have the loan program, but not all of them do. So that's another important thing. From my former state of Minnesota, I was surprised to see all of the metro area was approved there, and I thought that was really interesting because I was thinking of the equity sharing is kind of like a prepayment penalty, but it's not. It's an option. And so in the state of Minnesota, they don't allow prepayment penalties. So I was thinking, this probably won't work there. I was wrong. It does work there. It's already approved in all of those different counties. And so that was pretty neat to see. But yeah, I'll just say I've been on for a while now. If there's last call for comments, questions, again, I'm able to price things out, right here for you if you have scenarios that you want to go over. Basically, being a broker, I'm able to do what, some of these different marketing places will advertise that they do, where they say when banks compete, you win. But what happens when you go online and you put your information into those things, they sell your information and then your phone doesn't stop ringing, right? That's not what happens here. I actually do what they promise, right? So I actually have almost 300 lenders that I work with. I plug your information in one time. All of the quotes from all the different lenders, they're competing to have the lowest price for your scenario. And the cheapest one that floats up top is the one that we'll use. But again, if we change the type of loan or whatever, it's probably going to change the lender that's the cheapest on any given day. And so we go ahead and just go with the, with the one that makes the most sense. The two factors that I look at is price and have I closed a loan with them before? Are they able to get it done quickly? So like right now, I'm looking at this sheet here, and I'll blow it up here because I want you to be able to see it. The CMG at the top and some of these other names here that are, cheaper. I know right now that CMG, they're very affordable. They're cheap, but man, are they slow right now. I think they're buying the market and they haven't really staffed up for all the underwriting. Would you have to do a hard pull or a soft pull? So on the application, I generally start with the soft pull just because I need to be able to see, is this deal going to make sense? I know with your deal, you're already approved with that lender, so you probably have good enough credit. So I really just need to know what the debt to income ratio is. So that's what I would use the soft pull for. Or if it was something where you're like, Kenny, let's go ahead and do this, I would need a hard pull in order to close and fund the deal. So if you're ever making the decision that you want to actually move forward and get money from my company, it'll have to be a hard pull. I can't fund a loan with a soft pull, but I can put together a loan application and a quote based on a soft pull. Hopefully that makes sense. And regardless, I'll be able to do that without charging you anything up front for an application. So it's total free application. I know I'm saying that because some places charge up front now because it's just gotten so expensive to pull credit. $15,000 car debt, $250,000 salary, California VA loan. Are you thinking about consolidating that car debt? I guess I'm looking for what is the objective there. On one thing that I'll show you here with the salary. I get this question a lot, is basically how much loan can I approve for based on my income? So if I take your 270 salary and I divide that by 12 months, and I divide that again by 2, I need to keep your total debt below that amount, right? So on a $15,000 car debt, I'm not sure what that is on a monthly amount, but let's say it's $900, whatever. So I'm going to subtract $900 from that number. Monthly is $200. So I'll add that $900 back in and subtract $200 out of there. So in VA, you'd be able to go beyond this amount. But if that was your only debt, then that is the monthly mortgage amount that you would approve up to that amount. And then how much house can you buy for $11,000 a month? Well over $1 million. You know, it's probably going to be 1.4, 1.5, depending on property taxes and insurance. But that, you know, that's kind of something where we'd be able to drill down a little bit more. Are you looking at a 30-year loan or a 15-year loan? All of those kind of good things. Kay Thomas said, so I could take a higher rate for closing costs paid through me, and how much higher? Let's take a look. So if I modify this, FHA, I'm assuming good credit here in Texas. I'm going to stick with the 400 purchase price, but we can kind of figure, you know, if there's a little difference there, we can fine tune it later. But I'm figuring 3.5% down, and let's change the pricing. I mean, with CMG, they're so slow right now. So that's still 5.125 with no points, and you're actually getting a credit back. They're so much cheaper than these other guys, so that's tempting. But it's like, when do you need to close? So if you need to close inside of 30 days, I wouldn't be comfortable sending it there. Just so you know, like they're very, very slow right now. And they're slow because they're so much cheaper that they're getting, so many more applications. So if I go below there, Jet's great. They're getting stuff through very quickly. So 5 1/8 doesn't quite get us there. So if I jump the rate to, let's say, 5.375, you're closing in late March, early April. Well, then we could take CMG. 5 1/8, no points. There you go. But if we had to close sooner, we'd have to keep moving it up from 5.375. Let's check 5.5. Now, 5.5, we finally get some competition there. So we'd probably go with Loan United, no points, 5.5. But again, since you're able to go all the way to early April, game on, CMG, let's send it. At least I'll have a real quote that you can hold their feet to the fire and get a fantastic deal. So take my quote, reach out to me, just do like new construction. Text me the words new construction so I'll remember it's you. I'll send that the application link, get that whipped up, boom, boom, boom. I'll get it right back to you. And then you can take my quote over to them. It's a real quote. You saw it right here, CMG. They'll be able to do it for us. 5.125, no points. You know, I'll have it on a written form. They'll be able to see all of my information, all my licensing information, everything. And they'll probably call me and say, dude, what are you doing? Like, this is a really, really good quote. Is this real? Is basically going to be their question. And unless they're able to use the same lender that I have right there, but you know, not everybody has 300 lenders or whatever. But so that's what I would do if I were you, is at least have something in hand to hold their feet to the fire, because it's a good strategy. You know, people hold my feet to the fire all the time. You know, that's just the name of this business. This business is so competitive. You know, if you're thinking about getting in the mortgage business, you know, just be ready to, you know, you're forced to do what's best for the customer. That's a good thing. The really high competitive market is that, and longer time ago, you'd be able to get away with charging a little bit more money. Like, you know, I can kind of visualize what happened there, where you just kind of walk in, you know, we're just a one-stop shop. We're going to take care of everything and make it so easy for you. Part of that convenience is it's more expensive. You can keep that convenience, right? Just take the quote that I give you, bring it to them, say, there you go. Let's keep it convenient, but let's keep it realistic on price. And, you know, that'll go a long way. I think that'll be then what they'll end up doing, because they'll be able to take the contractor's profit margins to pad their costs. And that's with all closing costs paid, correct? That's with no lender fees and a small credit going towards your title fees. So my guess is, if you have your contract, I'd love to take a peek at it to see if they are having the lender pay those other costs, or if they're doing a seller credit, because it's normally a seller credit from the builder. And they're saying only if you work with our lender will we use this credit. Well, I don't know if you got a buyer's agent, but if you did, then I would talk to your buyer's agent to explain to them how legit this quote is here, and then we'd ask them to take your $15,000 seller credit. Man, $15,000 seller credit, we'd get way cheaper than 5.125. So what else are they crediting besides closing costs? Because obviously they're paying for all of your taxes, all of your insurance, your interest, your appraisal, your title fees. Like $15,000, that's a lot of money. You buying like a massive place, is it beyond like $800,000-$900,000? It can't be, because that'd be over FHA's max. Well, they own the lending company as well, right? Yeah, but I'm just wondering. Yeah, send me the contract. I'll plug my email in. I don't know if you're able to see my comments, but Kenny@applywithkenny.com is my email address to send that to me, and I'll take a look at it and see where the $15,000, because it's typically coming from the seller, so they're just taking it out of the property, the market value. So if you're a builder, think about, if you're on the other side of the table, if you're the builder, you want to control the market value as much as possible. You want to push the price up as much as possible. So that's why they're literally willing to throw in the kitchen sink for incentives. The only one thing that they don't want to do is reduce the price. The more they can push the price up, the more that puts up their comparable values, which is how homes are valued with, for appraisals. Like I'm looking at selling the house I'm sitting in right now, and I saw, a house recently sold for about $700,000. Well, before that one sold, maybe the best comparable might have only been 600 something, right? So as long as an appraiser can look at another house that sold, that's how they find comparable value, drives the market. So if you're the builder, you want to push the price up as much as possible. If that means that they pay a bunch of closing costs, if that means that they do a bunch of upgrades to the house for free, I call it the price of included, but their motivation is to raise the purchase price as much as possible. And so that's where I'm thinking that money will be in there. But even without that $15,000 credit, they're charging so much more than $15,000. Like we'll still be able to beat their quote at 5.875. That's just too much money. So interesting. And then if they own that lending company, I'll have a more in-depth conversation with them, because a lot of times it might be a JV. Cool. Let me see if I got it. I can confirm, refresh, got it. K. Thomas contract. So I got this is the loan estimate. I'm looking for the purchase agreement. So I see the seller credit for $15,000. Well, that's what I was assuming it is, but I'll zero that out in my quote, assuming that they won't give it to you. But if it's in your contract, your buyer's agent and I can argue to keep that in place, to go ahead and, I can't believe I know you cut it off at the top, but I'm curious what the date on this is. So I'm looking to see if the date is anywhere else on here. No. I mean, even if I go back a month from now, we didn't see rates that high. So, that'll be a fun one. Either way, you're looking at Christmas morning, right? We're going to be able to make it cheaper for you one way or another. So I'm glad we found each other. It's amazing technology. This TikTok stuff blows my mind. How beneficial this is for the consumer and for me looking to, I didn't know that you're going to be on here today, right? I just come on here at random. I typically try to come on in the mornings. Okay, so they did that back at the beginning of December. Let's take a look at where rates were back in December. So February, December. I'll remove my head. This is where the rates were kind of right where they're at right now. And then they went up and then they went back down. So I don't know. They didn't get that high either in the meantime. Even when it was like way up here, they weren't 5.875. They just weren't. So you're going to get them to lower their deal, or we'll just fund it on our side. So good news coming on that deal. But yeah, let's see, it's 4:30. I'll say last call for comments or questions, as it's now been a little over an hour. I typically try to just stay on for at least an hour a day. So I've been on for a little bit more than an hour. And I'd love to be able to say I'm going to commit to this time, but the only thing I'm really committing to is that I'm coming on every day for an hour, and my days are just kind of getting chaotic. So I try to get on in the morning, and then if that doesn't happen, then here I am in the afternoon, which has been more common than, before I was doing 10 a.m. Central. But I just can't commit to anything right now. So follow the channel, and it will alert you when I go live. Those are the only things that I know to say. If you want to see the channel, if you know anybody else looking to purchase or refinance, share it with them. And I appreciate everybody's comments, questions. But I'm going to get back to it here, and hope you guys have a wonderful rest of your Thursday. And then we'll be back on tomorrow for the weekend Friday show. I am going to be having some co-host people on here as well, some real estate agents, some other loan originators. And there was also an insurance rep that stopped by, and she was excited to get on here as well. Just kind of pounding the pavement, getting her name out there. And I think it's just beneficial to you to see the different angles of, home ownership. I'm a broker. She's a broker. She does insurance. I do mortgage. But if she has like a whole bunch of different carriers where I have a different lenders, same thing at play. One application gets you a whole bunch of quotes, and then we get to see the cream of the crop, what's going to be the best pricing for you to accomplish your goals. So I like being able to save people money. I feel like I'm in the best seat to help my friends and family, from myself actually, just financed a place not too long ago. So I like being able to offer that savings to you guys, and I do hold their feet to the fire. So if you have another quote, I purposely thin out my margins to make sure that my quotes are competitive. And I'd say bulls and bears make up a market. Pigs get slaughtered. So if we have pigs out there that are trying to charge too much, just a little soapbox moment, I'm happy to slaughter them. So definitely, interest rates, we're all fishing out of the same pond, as the saying goes. So if they're charging that much money, they're just really trying to make a lot of money on the financing side of the deal. Typically, I don't see it that egregious. I do save people, thousands of dollars from one quote to the next, but I think that one, just for fun, let's plug in what 5.875 pays back. It's almost 4 points. So I think, off of memory, I think it was about a $300,000 loan, give or take. So times 3.767. So they're making $11,301 off of that loan. It's just a lot of money to finance. There's no way for me to stop them from charging anybody else, but I can stop them from charging you that much. So that's all we can do today, is make a little progress, but glad to do it. So got a loan back in June, wondering if it could be worth to refinance now. Can you run the numbers? Absolutely. And the answer is absolutely. Time doesn't even have to pass. As a lender, if I do a loan and it gets refinanced or paid off, sold, whatever, within the first 6 months, the only thing that happens is I lose my commission. Okay. doesn't mean that you're blocked from doing anything. You as the consumer are able to do it whenever. The only time you're blocked is if it's a VA or an FHA loan and you're trying to get another one. So then 180 days have to pass, but you're past that. So yeah, absolutely, you'd be able to finance it. But tell me about the deal. Is it you lose commission on a refi? Yeah. So if I finance something and then it gets, oh, thank you. If the loan gets paid off too soon, it's called an early payoff. And the salesperson in that situation would be me. I'm the originator. That I would just have to pay back my commission on the deal if it gets paid off too soon. It's 6 months typically. Different for different situations, but that's how that goes. But Mr. J, tell me about the loan that you want to take a look at. Is it conventional, FHA? Is it your primary residence? Let's see here. All right. 6.875 conventional loan, 2-unit multifamily home. 458, and the home is worth around 500. Hannah, you want to refinance, but your credit's not the best. FHA, VA, those don't really require much for credit. There's also, see, we bought last year and have a 7.75 rate. Girl, let's fix it. There are quick and easy ways to get your credit almost kind of, I don't know if artificial is the right way to say it, but we can boost your score and take advantage of some lower interest rates. So definitely screenshot this and just put credit is the word. So I'll remember it's you, Hannah, and I'll be able to have a conversation with you about that. But let's take a look at this 6.875 conventional 2-unit multifamily home. Is it primary or an investment property? So I'll put the value at 500. And do you know your credit? It's a primary home, 760 score. Thank you. And we want to go 2 units. And I'm going to price it here in Texas, unless you tell me otherwise. It's going to be similar everywhere, but that's the location I have there right now. Let's see. 458 is the loan amount. Chicago, thank you. And let's see. So I'll change that to Illinois. And I think that might be Cook County. Might be wrong. I don't know. I don't think it matters. It just needs to be in the right state. Yep. Cook, thank you. And then did we see, conventional. Just want to make sure we have all of our bases covered there. I believe so. And then I'll change the pricing back to par. And let's take a look. Are you sure it's 500? You're so close to 90%. If we get you down to 90%, it makes a difference on your mortgage insurance. But right now we're at 91%. But let's see what it says. So you said you were at 6.875. This must still be, oh yeah, I still have FHA on there. I got to change it to conventional. I was like, these rates are too low. Yeah, I mean, we'll ask for a higher value. I mean, we don't control the appraisal, so whatever comes back at it, that's what it'll be. But let's see here. Yeah, Eric says 6%. That's what I'm looking at as well. With a point, a little less than a point. At 6%. So at that loan size, definitely makes sense to drop it from 6.875 down to 6% for sure. So if you want to text me Chicago, I'll be able to remember that's you, and we'll be able to get that one started, no problem. What would the principal and interest payment be on that? If I blow that up, let me do like this and pull it over here. Total payment. See if you can see that there. So it has your principal and interest of $27.46, your mortgage insurance of $145. So principal, interest, and mortgage insurance is $28.91. But that's where I'm saying if we get that slightly higher appraisal, let me do that for you real quick. I'm going to modify that to 90%. It'll drop that mortgage insurance. It's going to drop the principal and interest as well, but it drops the mortgage insurance $40 a month. That's the point to look at. So a little bit higher appraised value is going to change $40 more per month. So that'll be good to see. And like I say, we'll ask for it. But going back to Hannah, see, we were also told we have like 6 months in a row of on-time payments, and we had late payments. If you have late payments, we did like a manual underwrite. Sometimes it doesn't have to be a full year without the late payments. I have one right now where there's a late payment within a year, and if there's something like job loss or a hospital visit or something where there was a life event that explains why there was a late payment, then we're able to explain it away as kind of like it wasn't irresponsible. That wasn't the reason why it was late. It was because of this life event. And it's unlikely that a unique life event is just going to pop out of nowhere again, right? So if we do that kind of letter of explanation, which I'll help you write the letter and get that to clear underwriting, then so the example that I have for the gal that I'm helping right now, she had like a kidney stone. She was in the hospital for a little bit, and she had a job change. And that job change came with more money, which helped her get back on track. So she had a late payment, and then she got it back on track. And that was basically tied a bow on how that worked. And we're able to get her approved. She was looking to just buy a house, and so she's buying a house right now. My husband had a job change and got a higher paying job. Yeah, as long as it's kind of close to when the late payment happened, I'm able to tie that in the letter to that's the reason why there was a late payment or multiple late payments or what have you. And so this is basically the problem. This is what happened. This is the solution. And now we've reestablished, credibility moving forward. But he was off work for 2 weeks, and that's why we were late. Perfect. Job loss, life event. The letter of explanation writes itself, and I'm more than happy to help you go in there. I mean, 7.75, let's fix that. Let's get that lower. That's way too high. So definitely reach out on that one. That's just astronomical. So you're going to have a substantial savings just on interest. But the tip or the trick to kind of get your score to kind of skyrocket is if you have a friend or a family member that's willing to add you onto one or two of their credit cards. I had somebody that had a 520-ish, 530 credit score. Grandparents added them onto two of their credit cards, and a month later they were at a 700 credit score. So it's not about, for the credit stuff, it's not about atoning for, bad past credit. A lot of times people feel like I was late on a payment or I had a bad account. What if I just pay off that collection? What if I just do something like that? That's not going to help you. If you pay off a collection, that collection might be 5 years old. By paying it off, you make it a current account. It could actually hurt your score. But if you add new good credit, that's how you get a higher credit score. Let's see, house is 330 appraised, and you owe 323, but we have a second mortgage on it for the down payment. That's fine. A $9,000 deal there. We did do about $40,000 in renovations. Okay. And now that was back in June though. So in order to, I guess we could add in the receipts for the renovation. But what I was thinking is if we want to use the appraised value, we have to wait a year. Otherwise, we're going to have to prove the increase in value beyond the appraisal, because they're going to use the appraised value or the sales price, whichever is less, within a year. But with the renovations, that makes me want to say, tell me more. Like, let's see if we can document that, and then we can add that value and help out the situation. That'll definitely help for sure. So I would definitely reach out. Let's see, we had main drain line replacement and major foundation repairs. Okay. How do you reach out? Phone number is right on top. Just do a screen save or call or text to the number on the top. And I will send you the application link and we'll just get it started. There's no cost. It's just a bunch of value. We'll definitely get this, we'll make sure that anything that's, a hurdle in our way to, stands between you and a lower interest rate, we'll get through it and get that lower interest rate, save you a bunch of money. So that's what I'm aiming to do. But yeah, any other comments, questions? Happy to answer any real estate or mortgage related things. Actually, I am going to stay on for 3 more minutes. There's an incentive that TikTok does. I normally go for an hour, but if I go on for an hour and a half and it's been an hour and 27 minutes, then I don't know, they send me not a lot of money, but they send me a little bit to my PayPal, which is kind of neat. For any of you TikTokers out there, it's kind of fun to see a little bit of little balance. I think I have $20 or something in there, but I never thought of it as something that I would ever see. I never think of myself as a whatever influencer or whatever it is. Can you talk about first lien HELOC? Absolutely. So I love that loan program for the entire country except for Texas. So in Texas, you have to take out increments of $4,000 for a HELOC withdrawal. But there's a loan program that allows you to pay off your loan faster than any other one if you make a lot of income. That's the caveat. I'd say $15,000 a month or more, this pertains to you. If you make less than that, it probably doesn't pertain to you. But the way that works is whether it's a purchase or a refinance, the loan, the rate's going to be higher, but this will attack the amortization cost of a loan. People understand rate really well. They don't understand amortization cost as well, typically. So if you think about it this way, you get paid on Friday and you lump sum that payment into paying off your loan. Now you don't have any money left to pay your bills, but let's say a week goes by before you have to pull the money out for the bills, right? That time that went by, you reduced the amount of loan that you're paying interest on, because the HELOC, you only pay interest on the money borrowed. So as you paid it down, you stopped immediately paying interest on that amount of income that you paid down. And then being that it's tied to a checking account, the HELOC, home equity line of credit, you could literally buy a gallon of milk and borrow back $3.39 at the grocery store, right? For everywhere but Texas, right? But anyway, so you're able to just literally whatever you owe, you're able to pay that out of the equity. But when your income came in, you immediately stopped paying the interest on that. And so there's an illustration we can run for people that want to take a look at how quickly will their budget pay off their mortgage. If your goal is to pay off your mortgage as quickly as possible, there's no better program for it than that. However, I'm a huge fan of that. I would just say, caveat, if you have an idea of how you can invest your money, I would much rather you invest your money because interest rates are tax deductible. And so if you don't have an idea of how you can invest your money and make a return on your investment, then paying off your debt makes a lot of sense. But if you do have an idea of what you can do to invest your money and get your money working for you, you're probably going to make more than 6% or whatever return on your investment. Even if you put it into the S&P, historically you get better than, I think, 9% annual returns. Have a conventional 7.5% on investment property, would like to refi to reduce amortization and interest. So let's take a look at that. Modify this, and I'm just going to put in a scenario. I'll say conventional investment property. I'll assume good credit. I'll assume there's 20% equity in it. So I'll say 80%. The property value in here says $500, so a $400,000 loan amount. Feel free to, give me some feedback and I'll make the adjustments. And I'll price it for Texas, unless you let me know where it is. About to construct an ADU on the property and eventually leverage to grow property portfolio. I have a really interesting way to shortcut getting more investment properties, but TikTok doesn't like me to say it on here. I got community violations for it. So definitely reach out to me. Phone number's at the top, and I'll share with you. But let's take a look at what thought of DSCR. Yeah, it is DSCR is the loan program, but DSCR requires a 15% down payment. And so I know a way to do it with less money out of pocket. So it has to do with the seller being willing to do a holdback. So there's some seller financing that would go along with it. So you're looking for that scenario versus looking for the right property. But if you do it that way, I don't know what I can say, what I can't say, but there's more to it than that. Let's see. Did we say it's a single family place? I'm going to say single family. Or wait, obviously the ADU, but that doesn't make it necessarily a multifamily. All right, let's take a look. Oh, and I did 30-year. You want to do a shorter term, so I should have looked at a 15-year. So I'll let it think about it, and then I'll change it up. Conventional portfolio, modify, 15-year. First rate and term. And then I'll modify that to at 6.5 on a 15-year fixed it's costing us 0.5 point. A point is 1% of the loan amount. So let's see, approximately 260 equity, single family home, about to construct ADU. So whatever the loan amount is, if it's 260, I don't know, that might be 260 in equity over the loan amount. But if 260 is the loan amount, then 0.5 point would be $1,300 in lender cost to get 6.5 rate. And then obviously if we raise the interest rate, that lowers the closing costs. And then if vice versa, if we lower the rate, that'll increase the closing costs. But yeah, that DSCR deal to pick up more investment property is pretty sweet. And there's some, but the DSCR pushes the interest rate up a little bit. This would be a fully underwritten income. So that's a fantastic credit score. So you'll get the best access to interest rates for whatever's on the rate sheet for DSCR. This particular program doesn't price out DSCR very well, like the non-QM programs. So for those ones, I'll literally just make my account executives price out the deal for me. I basically send one email to like 20 people. They all just reply back to me, and I'll go through them and see who's going to give us the best deal. So it's a little bit more manual than this automated system that I have showing, over me here. But if you want to look at getting a more, I was going to say tangible, but an application in that you'd be able to actually get some financing on, screenshot this, text me to the number above. We can have a conversation about the way to pick up investment properties with less money down. And also, Hannah, thank you. I definitely want to talk with you and make sure we get yours down for sure. I got a lot of feels around your deal there. And Kay Thomas, we'll get your rate down on your new construction. So appreciate all the comments, all the questions. I'll say last call for comments or questions. If anybody has any comments or questions about real estate or mortgage, definitely let me know. Thanks for all the likes. Thanks for all the shares. Thank you for the information. I'll reach out. Awesome, Candy. Looking forward to it. But hope everybody has a fantastic rest of their thirsty Thursday. I'll be back on tomorrow for a wrap-up show for Friday. Looking forward to it, and make it a great rest of your day.